Good morning, everyone. My name is Jason Collins, and I'm with URL Insurance Group. I'm an agent support specialist here at URL, specializing in single premium life products. First off, I'd like to thank everyone for taking the time out of your busy schedule to be with us today. Those of you that are currently doing business with URL, I'd like to personally thank you. We understand that you have many options as to where to place your business. That's why we appreciate you working with URL, and we'll promise to continue our dedication to your success. Some of you are new to the URL family. Welcome. URL is a full-service national broker. We provide agents complete support in all of our lines. URL provides single premium life, fixed and indexed annuities, traditional life products, as well as individual and group health products. We also have a senior division that offers MedSup and MedAdvantage products. I'd also like to take a moment to mention URL's Gemini program. The Gemini program is a dynamic and multi-dimensional program offering exclusive rewards and benefits which can only be found at URL. Please take a moment after the webinar to tour our website at www.urlinsgroup.com and discover if there are any avenues for URL to assist with your success. Again, that website is www.urlinsgroup.com. I'm extremely excited to be part of presenting this program for you today. Single premium life has been growing in popularity the past few years. People, and more specifically baby boomers, are realizing that they have cash value in old whole life policies that they don't want to continue to pay into, have money that is set aside and earmarked for the next generation, making little or no interest in seedings or savings accounts, or have real concerns about their future with regards to long-term care. Today we're going to discuss two products that will help your clients with these concerns. I'm proud to introduce Garry Voith. Garry is the Vice President of Marketing and Communications at Baltimore Life. He's here to review the different single premium life options that Baltimore Life offers and how to discuss how they will benefit your clients. Before I turn it over to Garry, I'd like to mention, should you have any questions during the broadcast, there's a question box on the right side of your screen that you could type them in, and we'll answer at the end of the program. So without further ado, I'd like to turn the program over to Garry. Garry? Garry, you there?
Yeah, Jason, I'm here.
Oh, hello, okay.
There you go. Apologize. Good morning. Let's start again. Thanks, Jason, and good morning, everyone. Again, my name is Garry Voith. I'm with Baltimore Life. Certainly want to thank you for investing some of your very valuable time today to learn more about Baltimore Life's tax-efficient asset transfer program. Before we get started, let me just mention just up front, utilizing URL is a great partner here at Baltimore Life, but for you as an agent and who you're contracted with. The products we're going to be talking about today in the market may be a new market for you. And hopefully it is, because it's going to give you an opportunity to expand, to see more people and to increase your income. But you might say, well, how do I really break into this, and how do I get started? We're going to talk about some ideas on that today, but I would tell you that your first line of defense in doing that is really leveraging the expertise of the internal wholesaling team at URL. These people are really understanding the portfolio of products that they represent for you, their agents, and really can help you do what you're doing today, but then supplement that with getting into new marketplaces like selling our single premium whole life products. And you might be surprised that you're sitting on a gold mine within your client base that you might not be really thinking about as potential prospects, but we're going to talk today about how you should be thinking of who the potential prospects are out there for this market. But let's get started in understanding the products first in the market, and we'll get into some sales and marketing ideas. To talk about two products today in our presentation, our Generation Legacy and Single Premium Whole Life product. Both of these products are really designed for your senior clients in mind who have what we like to call some leave behind money. money they really don't need to live on. They just simply want to leave behind and create a legacy for their families, but do it in a tax-efficient way. Let's talk about the market first. It's absolutely huge. About $1 to $3 trillion in wealth is out there, and that wealth is being transferred in that amount each and every year. That's projected to happen between now and the year 2052. We know that about 55% of your clients' assets are moving on to their family members. About 16% of their wealth is moving on to their favorite charities. So yes, 71% of your clients' money is moving on to people in organizations they know and love. The question is, are they maximizing the amount of money they're passing along, and are they really doing it in the most tax-efficient way? Well, the first product we'll talk about is our Generation Legacy product, and this product is really designed for your senior clients who have money that they don't need to live on, that's tied up in single premium, non-qualified deferred annuities, and other qualified plan funds. So qualified funds such as 401ks, IRAs, and 403bs. These are clients that are also looking to leave an estate for their family and increase their estate in what they're able to effectively pass on in a tax-efficient way. The issue ages for this product that you'll learn about are 60 through age 80, and this product very uniquely and competitively combines with the writing of a single application, the issuing of two products, a single premium immediate annuity that will receive the transfer of funds from these vehicles that you have out there, along with a limited premium payment whole life product. Once these products are issued, both products are seamlessly administered together by Baltimore Life. Nothing for the agent to do, nothing for the client to do, provide all the benefits we'll be talking about. Of course, we offer simplified underwriting in this market through 4 tables of underwriting, and the product is automatically issued with our accelerated death benefit rider in all states where it's approved. We'll get into all these with you here today. So a little bit on the qualified market. It's also huge. About $2.3 trillion of in-force deferred annuities are out there. About 60% of that money is, of course, in tax-qualified plans, but about 40% of that money is in non-qualified deferred annuities. So the question to yourself is, do I have a book of annuity clients? You probably do. I know URL sells a lot of deferred annuities. So the question really becomes, what's the intent of that money? Does the client need to live on it? Are they looking just to accumulate the wealth and have no plans for using it as an income source? Well, what we know statistically is that a significant share of your clients are simply passing a lot of this qualified money and non-qualified deferred annuities along to the next generation. They're not using it as income. Of course, we know with qualified funds, if they're not using the funds, they are forced to do a required minimum distribution at 70.5. But ultimately, if they have these annuities that they've gotten great returns on through the years, they've had tax favorability, but if ultimately they die and the annuities are still in hand, they didn't really annuitize the funds, they're simply going to pass those funds along to their family members, and of course they're also passing along the tax on the gain for that money. And of course the people they're passing it along to are in a greater tax bracket. So the real question is, if you know the goal of the money is to pass it to the next generation anyway, and it's not needed for income, is the annuity the best product to die with? Or in effect, is there a better solution? Well, we feel there is a better solution with Generation Legacy. Let's think of Generation Legacy as a gift your client's looking to pass on to the next generation. And inside this gift box, you're going to help facilitate with your client the transfer of funds from non-qualified deferred annuities and other qualified plan funds. With a single application, as I mentioned, we're going to issue 2 products in that gift box, a single premium immediate annuity along with a limited premium payment whole life product. Over a period of either 7 or 10 years, depending on the issue age of the client, Baltimore Life is going to make annual premium payments from the SPIA to pay premiums on the life product. Now, what dictates the payment pattern? It's the issue age. So if a client's 60 to 74, we'll issue a 10-year SPIA along with a 10-year life product. If the client's 75 to 80, so 60 to 74 is a 10-year payment pattern. 75 to 80, we issue a 7-year payout on the SPIA along with the 7-year life product. Now here's where the product's benefits really get rich and competitive. What if the client were to die during the period while the SPIA is funding the life insurance each year? Well, we know that the life insurance will always pay an income tax-free death benefit that's greater than the single premium paid, right? But with our product, we also will pay to the beneficiary any remaining payments from the SPIA that were not used to pay premiums on the life product. So if they were 2 years into a 10-year payment stream and they die after 2 years, the remaining 8 years of payments from the SPIA would also be paid to the beneficiary. So the life product is paid income tax-free. The remaining payments from the SPIA, of course, would be taxed based on the portion that hasn't been taxed before, but we'll talk about that more later. Getting both back at death is certainly a competitive advantage we have with our Generation Legacy product. Now, at the end of the 7 or 10-year period, the SPIA goes away. It's done its job, and the life product now becomes fully paid up, continuing to provide an income tax-free death benefit greater than the single premium paid, continuing to provide a cash value growing on a tax-deferred basis, and yes, continuing to offer the accelerated death benefit riders we'll talk about. So just to recap, the issue ages are 60 through 80. We base our pricing on current age or age at last birthday. Now, the reason this is important is that you're going to be dealing with transferring of funds from other products and institutions, and that transfer process may take 20 to 40 days. We will issue the policy based on the age your client is the day we receive those funds. The minimum premium to get started is only $5,000. How many annuity clients do you have out there that have $5, $10, $20, $50,000 annuities, and they have multiple annuities, but they're just letting those annuities sit? They're not annuitizing the fund. Their only plan really is to move that money along. And of course, they're rolling it from period to period to get the best interest rate possible, but clearly their plan is not to annuitize the funds. They're simply wanting to pass it along. Great prospects for Generation Legacy. By the way, the average premium we see on this product is about $60,000. The maximum face amount that we'll issue on the life product based on the single premium paid is $450,000. Now, we do have 2 underwriting classes, non-tobacco and tobacco, and through simplified underwriting, we'll issue any risk within those underwriting classes that are standard through Table 4. Cash values, they accumulate in the life insurance product on a non-participating basis, but here's another key thing to remember. If the client needs surrender capability, they can do it through partial surrenders, which can happen anytime after the life product becomes paid up, 7 or 10 years, or they have loans available at any time from the available cash value at a maximum interest rate of 8%. So now let's talk about the accelerated death benefit rider, because truly this will provide living benefits to your client at a time when it's needed most. There are 3 health event triggers that will allow your client to accelerate the benefits on our riders. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care and adult daycare. Upon decision to accelerate, which can happen any time after the issue of the policy, a lien for the amount of money accelerated will accumulate at an annual interest rate of 8%, and eventually that'll be deducted from the face amount of the death benefit. We'll show you some examples of that in a moment. The maximum face, or the maximum amount that you can actually accelerate, is $250,000. The minimum is $5,000. But the good news is this benefit is paid out once, and it's paid out in a lump sum, so the client really has cash at a time when they need it most. The other thing to mention here is that these are unrestricted funds, so the client has no boundaries in terms of how they can spend the money. This is money they can spend however they would like to at that point in life. So now let's look at the definitions of these benefit triggers and the percentages of payout. The first one is terminal illness. And here, if they're diagnosed by their doctor as terminally ill with a life expectancy of 12 months or less, they can accelerate up to 75% of the face amount. The second trigger or rider covers both the nursing home trigger as well as the extended care trigger. For the nursing home confinement, they need to be diagnosed as chronically ill, confined to a nursing home continuously for 90 days, but with the expectation of a permanent confinement. Here they could accelerate up to 50%. And for extended care, they need to be chronically ill, have been so for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state-certified adult daycare center. And here they can accelerate a maximum of 50%. Now, there are some state variations to these percentages that you'll find on our state approval charts, but I know that you all, many of you might be in Pennsylvania. Pennsylvania, just like Indiana, for example, uses the acceleration rates of 65% for terminal illness and 40% for the qualified nursing and extended care, a little bit more conservative approach in those particular states. So what's the definition of chronic illness? Well, as it applies to the nursing home confinement and extended care situations, well, if client satisfies either of these definitions, we consider them to be chronically ill. The first of which, they can't perform 2 out of 6 activities of daily living that you see on the screen. Maybe they're okay on their ADLs, but possibly they could be suffering from a severe organic mental illness such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's look at some examples of how this accelerated benefit might work. We're going to assume in this example the client has a $100,000 face on the life product and they're terminal. So they'd like to accelerate in a maximum rate of 75%, or $75,000 in cash would be paid out as a living benefit. Now, for the transaction of acceleration, we do add a $100 service fee. So the accelerated, the death benefit lien, I should say, starts out at $75,100. Now, if this client were to die immediately after getting their money, no time for interest to accrue on the lien, the remaining death benefit would simply be the face amount less the lien, giving you a remaining life insurance death benefit of $24,900. But the more practical example is probably this one, and that's where they die 1 year after getting their cash. So now you have the face amount less the original lien plus 1 year's worth of interest, and for argument, we're just going to assume the maximum rate of 8%, and then it gives you a remaining death benefit of $18,892. So as you can see, these riders are really designed to be able to provide cash now, but still have remaining death benefit for your client's beneficiary. So could these riders technically terminate, you might ask? Well, they could technically terminate. Let's talk about it. The first example would be, what if the whole life policy ends? And you're thinking to yourself, well, hold it. The SPIA is paying for the life product automatically. How would the life policy end? Well, let's say the client started by giving you $100,000 to start this on a 10-year payment plan, so to speak, and 2 years into the 10-year period, they come to you and say, gee, I thought that $100,000 was leave behind money, but now I need the cash. What do I do? Well, technically, they could cash surrender the whole life policy. Not a lot of cash value there at that time. And when they decouple the life policy from the SPIA, the remaining payments from the SPIA would be paid annually to the beneficiary. So that's one way they would do it. But of course, when they terminate the life policy, the accelerated death benefit rider would also stop. Obviously, if the insured dies, we pay a death benefit instead. And finally, what if you accelerate, let's say, under the nursing home confinement provision at 50%? Once you accelerate, that's it. You can't accelerate a second time. You can only accelerate once. The other example would be, what if in the very, very situation that the lien and the interest exceed the remaining death benefit? I'll use a quick example. In that terminal situation we looked at before, that client would have to live 4+ years for the interest to outrun the remaining death benefit. In that extremely unlikely case that that would happen, technically the interest could outrun the remaining death benefit, which would terminate the life policy and, of course, terminate the riders. But in that very unlikely scenario, the owner may repay all or part of the lien at any time just to keep this qualified as a life contract. Now, keep in mind, even though you accelerate a benefit, there is still a cash value in the life product accumulating on a tax-deferred basis. And if you accelerate a benefit, you cannot also have a policy loan. It's one or the other. The last thing to remember is that no matter whether you're working with our company's benefit or any company's similar benefit, please make sure to tell your client to consult with their tax advisor if they'd like to accelerate, because technically in certain situations, this benefit may, and the key word is may, be considered taxable as income. So here's a quick example of the potential payouts here. And this is that 70-year-old female who's non-tobacco, who puts $50,000, let's say, in from an annuity. We would issue a life policy face amount of $78,000, nearly $451. So you've immediately increased her estate value at death by $28,451, keeping in mind that if she dies, in this case, in the first 10 years, the remaining benefits from the SPIA would also be paid. But look at these accelerated death benefits that she could get. Nearly 59 grand on a terminal illness and over 39,000 for qualified nursing and extended care. I mean, this is real cash money to a senior who at end of life is needing some cash for whatever reason they might want. Most seniors, of course, are in a position where they probably can't afford long-term care insurance. Now, this certainly is not a replacement for long-term care insurance, which is the best solution to a long-term care need. But as I said, most seniors can't afford long-term care insurance, so it is kind of nice to know they can accelerate their life insurance benefits and have some cash at end of life. So what about another tax efficiency of this program? What about the transfer of the funds, all right? So if you're transferring money, let's say from an IRA that's never been taxed before, or if you're transferring money from an annuity where there's a cost basis and a gain, we eventually know that Uncle Sam has to be paid on the gain of any annuity out there, right? Or qualified plan. They have to be taxed eventually on that money, or you're going to pass it along at death. Well, the nice thing is with our product, let's say there's an IRA involved. If you transfer an IRA into the SPIA portion of our Generation Legacy product, it's going into a qualified SPIA that's going to be used as a vehicle to pay for life insurance over 10 or 7 years. So as a result, you're able to spread out the tax on that gain over the same 10 or 7-year period. That's a really nice feature for a senior who, instead of getting slammed all at once on tax, is able to spread it. And that's the advantage of putting it into Generation Legacy. Now, the nice thing is the payment we make each year from the SPIA to the life product does satisfy the RMD rules. And the other thing is, I mentioned before, at death, we know that the life insurance benefit is paid income tax-free. But what about the remaining payments from the SPIA? Well, that payout to the beneficiary is taxed based on the portion of the money that hasn't been taxed before. So if it's IRA money, of course, all the money paid out on the remaining payments of the SPIA would be taxable. And if it's an annuity, a portion of those funds that are above the basis would be taxable. But of course, they're still getting that money at death. That's a solid benefit and a very competitive feature. One more thing on tax that I'll mention related to the application. Because we're dealing with the transfer of funds from annuities and qualified plans, we have to ask the question on our application, do you want a withholding on the money you're rolling over? We ask that question, but the way this product is that we cannot accommodate a withholding in advance of money that's being rolled over. Otherwise, the product just won't work. So please make sure you check the box on the app that you do not want tax withheld on the annuity you're rolling. Otherwise, we have to send everything back to you. So now let's take a look at premiums, examples, and death benefits that it's going to spin off from that premium. This is the 65-year-old non-tobacco user, and because they're 65 with $50,000 in premium, we're going to issue a 10-year payout on the SPIA along with a 10-year life product. This male at 65 will issue with that 50 grand a face amount of $77,361 and change. For the female, the face amount is $87,031 and change. So what did you just do for this female 65? With her 50 grand sitting in an annuity, let's say, with money she didn't have any plans to need for income, you've increased the estate now she's able to pass on to her heirs by over $37,000. Keeping in mind that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, if she says to you, well, Jason, what if I was in a 25% tax bracket and I'm making 3% interest on my money in that annuity? It would take her over 19 years just to accumulate the $87,000 that was paid from the life insurance, all right? And let's not forget that the life insurance benefit of over $87,000 is always going to be payable income tax-free at the client's death. So here's the 75-year-old, a little older, a little shorter life expectancy, but the numbers still look good, don't they? With this same $50,000, with the 75-year-old, we'll issue a 7-year payout on the SPIA, along with the 7-year life product. For the male, the face amount is $61,516 and change, and for the female, the face is over $67,000. So even at 75, you've increased this man's estate by over $12,000, and you've increased this lady's estate by over $17,000, knowing that if they die in the first 7 years, the remaining payments from the SPIA would also be paid. I tell you, I've been working with this product for many years now. I'm also a licensed agent myself, and I'll tell you that seniors get very excited when they see this concept, especially when they have money on the sidelines that is in fact leave behind money, and they simply want to pass it along. You're doing a favor for them to help them pass along a greater amount in a tax-efficient way. With their excitement of buying and making this purchase on that concept, what's going to happen is they're going to talk to their friends, and they do. And it's going to create a great opportunity for you to leverage those relationships and conversations by asking for referrals early and often. All right, here's a ledger that I'd like to show you. This ledger is a screenshot of part of the proposal software that we have available for you out on our agent site. You can also get a similar type of ledger look on our Mobile Link software. And I'll talk more about Mobile Link later. It's basically an application you can use right on your phone, and I think you're really going to like that a lot. Here's a female 70, non-tobacco, who has an annuity with $50,000 in it. Her cost basis is $40,000. You see there in column 3 where the $50,000 goes in to start. And out of that $50,000 each year, we'll make an annual premium from the SPIA to the life product of $5,570 a year. Out of that payment, nearly $4,000 of it is excluded from tax, and the estimated taxable income is about $1,571 a year. That column is extremely important for the client to understand. That's the gain and the interest on that money over 10 years that will essentially become their estimated taxable income. You never want them to be surprised about getting a 1099 for $1,571 a year. Make sure they understand it. Uncle Sam has to get paid. They're just able to spread it out over a 10-year period in this case. The life insurance benefit is shown in the last column, $78,451, and of course the commuted lump sum from the SPIA paid out at death if they die early is also shown in this proposal. This proposal really gives you a good ebb and flow and understanding of how the product is personalized and comes together for your particular client. So what about submitting new business? Let's keep this very simple. Out on our agent website, we have product toolkits set up for every product you're personally contracted for with us. And in those product toolkits, you're really going to find everything you need to sell and market our products. I'm going to show you a few of those things later on. But one of the key things in the toolkit at the top is something called the printable application and forms package. You'll answer a couple of quick questions, and it's going to automatically populate for you the forms that you need to do business with us. It will not only print the forms that you need, but it's also going to print a set of instructions that tells you how to submit your business to us and also how to complete the very important point of sale underwriting interview. That's where as soon as you finish the app, you're going to complete a short 12-minute interview with your client in our call center, and well over 90% of the time, we're going to give you an immediate underwriting decision right there at point of sale. We'll talk more about that later. In that product toolkit, you're going to find a number of other great marketing tools. Our agent guides, our client brochures, letters, phone approaches, a number of different things. One of the things that I want to mention to you now quickly, and I'll show it to you later, is our Mobile Link software. Write this one down. It's mobile.baltlife.com, mobile.baltlife.com. I'll show you that later, but Mobile Link is essentially like having an agent guide right on your phone, and it gives you the ability to calculate rates and values and show ledgers very, very quickly. Let's get into our single premium life product. This is the sister product, and it really has the same goals for your clients in mind. A client who has leave behind money they don't need to live on. They want to simply leave behind, generate an estate for their family, but it has some key differences, and here's the first of the key differences. It's the source of the funds. This product is going to take single premium dollars from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. The issue ages for the product are 50 through 85, a little broader issue age because we're working with after-tax cash funds. Simplified underwriting. We have simplified underwriting, same as Generation Legacy, but the difference here is we have it through 8 tables of underwriting. We'll talk about that in a moment. And finally, we have that same accelerated death benefit rider that's included at issue in all states where it's approved. This rider has the same 3 health event triggers, but as you're going to hear, it gives you a little bit more lucrative and flexible way to accelerate the benefits, and we'll talk about that. So 50 through 85 based on current age or age at last birthday. The underwriting, we either have non-tobacco or tobacco, level 1, which is standard through table 4, just like what you have for Generation Legacy. But with this product, you have a second level or tier, tables 5 through 8. So a client with a few more challenging health issues is going to qualify. This, for example, could be your insulin-dependent diabetic, who's insulin-dependent diabetic, the insulin is controlling their diabetes, they don't have any other major health issues going on. They would qualify, let's say, under that level 2. Minimum premium for this product, again, is only $5,000. How many clients do you have out there, prospects, that you fact find that have CDs, many of them, 5, 10s, 20s, $30,000 CDs, that they have the money siloed or earmarked for certain reasons? This money's going for my kids, the grandkids, the favorite church or charity. They silo their money. They set it up for particular reasons that their family, who's going to take care of their estate, knows what those reasons are. What if you were trying to sell life insurance, for example, and a client says to you, Jason, I really don't need life insurance. I have a burial account set up. Well, that probably means one of 2 things. It either means they have a prearrangement with a local funeral home, or they have a $15,000 CD set up at their local bank that their kids, who are handling their estate, know that's the money set aside to bury them. Well, here's how that role play might work with a 70-year-old female. Mrs. Jones, you're 70, you're going to live many more years and costs are going to go up. What if I was able to show you a way to take that $15,000 CD and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal, in a nursing home or an extended care situation, you could get at some of that $25,000 for your end-of-life type of expenses and still have it set up to have some remaining life insurance benefit there for your family. That's called the burial account concept, and I can't tell you how many agents got it started selling single premium life products just using that simple approach. They started selling $5,000, $10,000, $15,000 premiums, but what they found out very quickly once they realized, hey, this is pretty good, is that fact-finding is important to locate the money, but the other part of fact-finding that's critically important is finding out what the intent of the money actually is. We'll talk about fact-finding later on. What's the, by the way, the average premium for this product? It's about $30,000 to $35,000. The maximum face amount for single premium whole life is expressed in terms of the maximum net amount at risk. And that's really the difference between the face amount that we issue and the premium payment paid. That gap is the net amount at risk. And this is just a table that shows you what they are. All of our software is driven to not allow you to violate that maximum net amount at risk. Cash values, they accumulate in this product on a non-participating basis, but here's another difference. Partial surrender capability starting in the 2nd policy year. So if you have a client who gives you that $100,000 and says it's leave behind money, but in year 2, 3, 4, whatever, they say, hey, ooh, I came into an emergency. Can I get at some of that money? Well, with this product, because you're working with after-tax cash funds, in year 2, they can take up to a 10% partial surrender. In year 3, 20%, 30% in year 4, 40% in year 5, but from the 6th year forward, 100% of the available cash value can be taken as a partial surrender. Now loans, they're available at any time at a maximum rate of 8%. So now let's talk about that accelerated death benefit rider. The same 3 health event triggers I gave you for Generation Legacy and you see on the screen. Same advantage of being able to get the money paid out once in a lump sum, and these are unrestricted funds. But here's the difference. The key difference here is that if the client says, you know what, I really don't care about life insurance. I want as much money as I can get and forget the life insurance, they can do that. That's a full acceleration. We'll show you those examples. Or they might say to you, well, you know what, I do want some life insurance left behind, so let's take a certain amount of life insurance paid up here and leave that, and then accelerate the balance of the face amount at a certain percentage. That's called a partial acceleration. That option is also available. So here are the examples. Terminal illness, same definition to qualify we gave you before, but now if the client wants a full acceleration, they can do that at 95% of the face amount, less a $250 admin charge. For qualified nursing, same definition to qualify again that we gave you, but now because they're going to live longer, the maximum accelerated rate is 90% less the $250 admin charge. And finally, for extended care, home health care, and adult daycare, because they're going to live longer yet, the maximum full accelerated rate is 80% less the $250 charge. And keep in mind, in all 3 of these examples I gave you, don't forget they can do a partial acceleration, leaving a certain amount paid up and then accelerating the balance of the face at these percentages. Same definition for chronic illness, 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness. Either trigger will, or example or scenario will allow you to accelerate the qualified nursing and extended care provisions of the accelerated death benefit rider. So now let's take a look at premiums to death benefits. And I want you to start thinking about those clients and prospects you're out there with that you know, because you've done a good fact find, where the money is, and more importantly, what the intent of the money is. Here's the single premium example, age 65, non-tobacco user with $50,000 in premium. And with that $50,000, the male at level 1 underwriting, which is standards through table 4, can get a face amount of just short of $82,000. For the female, the face amount would be just short of $93,000. But let's not forget, with this product, you have a second level of underwriting, tables 5 through 8. And at every age and gender, you'll find that the second tier of underwriting only will reduce the face as compared to level 1 underwriting at an amount of about $5,000 to $6,000. So it's about $5,000 to $6,000 less face in level 2 as compared to level 1. Not bad considering that level is available to you. So what did you just do for a female 65? Keep in mind, let's put this in perspective. You're taking money, let's say 50 grand from a CD that's probably making less than 1% interest in the bank for them, right? They're pretty frustrated, seniors are, at the returns on their money. And then to add insult to injury, they're getting 1099 on that each year. So they're taking 50 grand that they just want to leave behind anyway, putting it into this product, and you're increasing this lady's estate by nearly $43,000. Now, she might say, well, what if I left the money at a higher rate of return, like 3%, and I'm in a 25% tax bracket? It would take her 28 years just to match the nearly $43,000 you're increasing her estate by. Keep in mind that the life insurance benefit of over nearly $93,000 is always going to be paid income tax free. Now, one of the tools we have out on our website is a comparison spreadsheet that you can use that will actually show these comparisons at different tax bracket and what the increase of the estate is along each year along the way. I think you'll like that, and it really does show up well when you're working with a client so they can understand that, my God, even if I left the money at interest, you know, I'm so much better off right here doing this. Here's the 70-year-old, a little older, a little shorter life expectancy, but the numbers still look pretty good, don't they? At 70, the male's going to get a face amount of nearly 74 grand at level 1 underwriting, and the female a face of just over $82,000. And then you have that second tier of underwriting, which is about $5,000 to $6,000 less. Seniors, when they're making less than 1% of interest on a CD, love this, especially if the intent of the money is just to pass it along anyway. Great opportunity to sell, great opportunity for referrals. Forms, same story. Go to the website, go to the product toolkit for single premium whole life, click on the application and forms package, answer the questions, get your forms. You can print them locally, you can order from us, and then you're also going to get the instructions to do the point of sale underwriting interview. We have a bunch of other great marketing tools. I'm going to show you these later on. So let's go over this point of sale underwriting. This is so important because when we started our Generation Legacy product about 8 years ago, we worked with a lot of annuity producers, and they were saying to us, well, I get the concept of asset transfer, but I really am not sure about life insurance underwriting. We said, well, what if as soon as you write the app, you can complete a short 12-minute interview with us and get an underwriting decision right then and there. That way, before you start moving funds around, you know what's going on. Well, they love it, and that's why these are our biggest two selling products. So yeah, you complete the app, you pick up the phone, and when you call our call center with your client to do this interview, they're going to be reviewing with them the same health questions that you completed on the paper app. The difference is we're firing off in the background the data we need to look at from the Medical Information Bureau and a prescription drug database check. That way, if there's any conflicting data at those sources as compared to how the app questions are being answered, we can clarify it right then and there and make a solid underwriting decision. Now, any underwriting decision we make is not communicated to the client. It's communicated to you, the agent. You're the one that's going to tell the client that they're approved. At the end of the app, or doing the interview, we're going to give you a confirmation number for the interview that we ask you to write on the first page of the application you're submitting. So obviously, once you finish the app, make sure you get all the forms, all the paper to us. All the instructions are in the app package. So these instructions are also with the app package, but let me go over them. The call center hours and the number. The number toll-free is 888-368-9678. The hours are 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Fridays. These are Eastern times. We do support English and Spanish languages. Other languages are available upon request. We do have TTY services in English and Spanish for your hearing impaired clients. Keep in mind this interview must be completed, though, within 5 days of completing your app. Now, you might say to us, well, what if I complete an app on a Saturday, or I'm on the West Coast and I'm writing after hours? What do I do? Well, no matter when you complete your app, you want to pick up the phone, call the call center, and leave your name and number, your client's name and number, and a date and time you want us to complete the interview. We'll call the client at that time, get the interview done, and call you back with the underwriting decision. Because remember, you're the one that's going to communicate it to the client. Obviously, if you're doing this during normal hours, the interview gets done while you're there, and everybody's happy because the decision is made. So how do you pre-qualify an app? Well, we have an app for each product, and the reason we do is that for Generation Legacy, we have one tier of underwriting. So as a result, we have a one section of medical question, a Part A. Think of the Part A questions as knockouts. If you get a yes in Part A, it means your client doesn't qualify through 4 tables of underwriting. But if all the answers are no, the height and weight, MIB, and drug history look good, we're going to issue the Generation Legacy product. With single premium whole life, we have those 2 tiers of underwriting. So as a result, we have a Part A and Part B. Still think of Part A as knockout questions. If you get a yes in Part A, it means your client doesn't qualify through 8 tables of underwriting. But if you're all no in Part A and B, drug history, MIB, and height and weight look good, we're going to issue Tier 1, which is standards through Table 4. If you're all no in Part A with 1 yes in Part B, everything else looking good, we're going to issue Tier 2, which is Tables 5 through 8. So that essentially is the products and the underwriting of the products. But now I think more importantly, now that you understand some basic product, let's take a look at some marketing in our remaining time. We've been talking all along about the agent website at Baltimore Life and our product toolkits. At the top of the screen, this is the screen you're looking at now is a screenshot of our home page. At the top of the home page, you see those colored boxes. Those are representative of product toolkits. So if you're contracted for 2 products with us, you'll see 2 product toolkits. So when you click on, let's say, Generation Legacy, here's what the toolkit looks like. And it has really everything you need to sell and market. The example is that printable application and forms package we've been talking about. There's a number of other things out there, including on-demand training, all your marketing materials, your state approval charts, your product announcements, but a bunch of other stuff. Let's talk about a few of those things right now in a show and tell. Mobile link. I've talked about this before, but there it is again. Write that one down because you can start using it today. mobile.baltlife.com. Basically, it's not a downloadable app. This basically is going out to a URL on your phone, and when you get there, you're going to hit a shortcut on your phone that will save this address as a shortcut right to your phone. It'll give you a little ship icon that looks like Baltimore Life, and it says mobile link, and then you're off to the races. But now you have what is an electronic agent guide right on your phone. The product information, the underwriting guidelines, as well as, more importantly, a rate and value calculator. These products, both that we've talked about today, are non-illustrated products, so a signed illustration isn't needed. So like with Generation Legacy, that ledger I showed you, you can do that right on your phone. And believe me, I've done that with clients before, and all of our agents have done it. They really don't use paper agent guides anymore. They rely on mobile link. So you have both the products that we talked about today accessible on mobile link, and then also our SilverGuard product, which is the final expense product. What about a point-of-sale presentation piece? Agents are great storytellers, but isn't it nice to support your verbal presentation with a visual presentation? Secure Solution Presenter is essentially an electronic storybook. You can download it right from our agent website, have presentations on all of our products and financial concepts, and then you can show this presentation on your laptop with your client. You can print it if you like to work with hard copies instead. Here's an example of the presentations. Nice visual quality, explains the concepts of asset transfer and who it benefits, gives you key dialoguing questions to ask your clients. It gives you the features and benefits. It gives you visual examples, that gift box concept, showing you how 2 products essentially work together as one. It gives you examples if you deposit or pay, I should say pay a certain premium, the death benefits and the estate increase that you would see. It also explains the accelerated death benefit riders. So all this is out there with Generation Legacy, Single Premium Whole Life, in Secure Solution Presenter. I'm going to skip down in my PowerPoint here for a moment, and I'm going to show the other very important thing, and that's the fact-finding process. If I had to say what's the one thing that is pivotal to your success in the asset transfer market, it's fact-finding. And it's not just about locating money, it's about understanding the intent of the money. That's where you're going to shine. That's when you're going to start selling a lot of this business. So if you need some help supplementing your fact finds, the asset transfer analysis form can do that. In the middle of the form, you can record the client's current assets, CDs, money markets, annuities, and so forth, and show them right there that if they transfer a portion of those funds not needed for living into one of our products, the increase that will make in their estate value. The bottom of the form allows you to record the client's current monthly income, because obviously you want to make sure they have enough income now and later before you start disturbing their funds. The top of the form, though, are those key questions you should be asking to find intent. One of them, for example, is, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's really not needed for your daily living? And most people get the leave behind money concept, or the safe money concept. If they don't, it's going to create a great conversation. This screen represents another document in the product toolkit under marketing called Single Premium Sales Ideas. And each of these ideas that I've got listed here are explained in full. When you're reading the full document, I'd recommend a blank sheet of paper and starting to think about the people you can immediately go and call on. We've talked about your annuity client. Perfect clients out there to go talk to, because if their only goal is to pass the money along, why not do it with Generation Legacy? What about some of those older paid-up life policies where the cash values are close to equaling the death benefit? You can find 1, 2, or 5 of those paid-up policies out there, and you can 1035 exchange those into single premium whole life and get a greater paid-up death benefit. What about some of the old ULs where the cash values are going in the wrong direction? If you can rescue at least $5,000 of that money, you can 1035 it into single premium whole life and get a higher paid-up death benefit. And then, of course, we talked about the burial account concept. Great way to get started, great way to turn yourself from being a final expense type sale into a little bit different sale and bigger premium dollars. There's a bunch of other great ideas out there for you to look at. Then we have these customizable marketing flyers. Explains the concepts of asset transfer, features and benefits of a solution, and then you can customize the flyer with your contact information and print as many of these as you like. I've seen agents use these in stand-up seminars. I've seen them use them at point of sale, mailers, number of different things. We have print ads out there for your use. We have letters, we have mailer postcards, we have phone approaches, we have white papers and other articles. All this, again, can be found out at the Baltimore Life agent website inside of our product toolkits. So with that, the last thing I want to mention is another benefit of selling us here at Baltimore Life. Certainly URL, you've got opportunities for incentives there. That's fantastic. But with all your carriers that you write, you have those same opportunities. At Baltimore Life, you have the opportunity with us to attend our next Leaders Conference, which is at the Grand Fiesta Americana Los Cabos Golf and Spa, and that's down in the Baja Peninsula in Cabo. And it's you and a guest, all expenses paid next May for a great trip. To qualify, you're only talking about $600,000 in single premium business. That sounds like a lot, but when your average premiums for Generation Legacy are at about $60,000 and your single premium whole life business about $30,000 to $35,000, it doesn't take a lot to get there if you're paying attention. The great thing about our trips, it's all about fun. We don't have business meetings. It's all about fun for you and a guest, and I think it's one of the lower qualifying amounts out there for a company trip. So hopefully you make your reservations now on your calendar for us and attend our conference next year. And I'm sure if you qualify for ours, you're probably going to qualify something at URL as well. So Jason, with that kind of wraps up my presentation today. Hopefully, people had walked away with some good ideas to get started. And again, please leverage the great people at URL. They understand this market and they understand how to get into it and then how to utilize the product solutions for the need. Jason, I'll bring it back to you. Thanks everyone for participating today.
Yeah, thanks Gary. That was once again very great and informative presentation. I don't see any questions on the question box. So with that being said also, I'd like to thank everyone for joining our presentation today. Please feel free to call us at URL for all your single premium life and annuity needs. Should it be brochures, illustrations, or simply just answers to your questions. Our toll-free number is 1-800-926-8875. Again, my name is Jason Collins. I'm at extension 156. You can also ask for Joe Corio at extension 111 or Maria Adams at extension 102. Thanks, everybody. Have a wonderful day.